Welcome to our new IFRS Educational Fund Service. It's an initiative of Old Generation Limited. It's dedicated to providing complementary and supplementary education on International Financial Reporting Standards (IFRS) through a multiple-choice question and answer approach. It is intended to make learning or intellectual assurance fun. In this session, we shall be considering 10 questions of set 1 to which the answers have been provided on IAS 38. This is standard on intangible assets. Viewers or subscribers have 30 seconds to select or choose the answer to each question. The answers to the 10 questions are revealed at the end of all the questions. Please enjoy it. Question number 1. Which of the following is not associated with the meaning of intangible assets? A. Monetary asset. B. Non-monetary asset. C. Identifiable. D. Non-physical. E. None of the above. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 2. The original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding is called dash. A. Development. B. Research. C. Research and development. D. Innovation. E. Innovation and development. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 3. The cost of an intangible asset does not include which of these? A. Cash paid. B. Cash equivalents paid. C. The fair value of other consideration given to acquire the asset. D. The amount attributed to the asset when initially recognized in line with an IFRS. E. All of the above. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 4. The number of production units expected to be obtained from an asset by an entity is called dash. A. Legal life. B. Depreciable life. C. Nominal life. D. Useful life. E. Production rate life. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 5. Which of the following is not recognized as intangible assets under IAS 38? A. Copyrights. B. Computer software. C. Customer lists. D. Franchises. E. Marketing rights. Time counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 6. Which of the following holds under IAS 38? A. Intangible items that are identifiable under the control of an entity and with future economic benefits are expensed. B, internally generated goodwill is recognized as an asset. C, expenditure incurred at the research phase of a project is intangible asset. D, certain expenditure incurred at the development phase of a project is recognized as intangible assets. E, C, and D. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 7. Which of the following internally generated items can be recognized as intangible assets? A, brands. B, publishing titles. C, mastheads. D, customer lists. D, none of the above. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 8. Past expenses which were expense that arose from activities on an intangible project are dash. A, reinstated as intangible assets based on subsequent consideration. B, reinstated as receivable based on subsequent future economic benefits arising from the activities. C, reinstated as deferred charges when economic success is highly probable. D, not recognized as part of the cost of an intangible asset at a later date. E, not retrospectively restated on correction of prior period error. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 9. Where the previous revaluation decrease of an intangible asset was recognized in profit or loss. The revaluation surplus of a current period, which is less than the previous revaluation decrease amount, is dash. A, recognized in profit or loss. B, recognized in other comprehensive income. C, deducted from the revaluation surplus reserve. D, recognized directly in retained earnings. E, disregarded until the intangible asset is recovered through disposal. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 10. Where no previous revaluation had ever been done, revaluation decrease on an intangible asset is dash. A, recognized in profit or loss. B, recognized in other comprehensive income. C, recognized as a negative revaluation reserve. D, deducted directly from retained earnings. E, disregarded until the intangible asset is recovered through disposal. Time counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to review the answers. Question number 1. The answer to question number 1 is A, monetary assets. Intangible asset is not a monetary asset because monetary assets are money held and asset to be received in fixed or determinable amounts of money. Intangible assets are not received in fixed or determinable amount of money, and neither are they money held. A is the answer to question number 1. Question number 2. The answer to question number 2 is B, research. Research is the original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. It is different from development, which is the application of such findings or other knowledge to a plan or design for the production of new or substantially improved materials, devices, products, processes, systems, or services before the start of commercial production or use. B is the answer to question number 2. Question number 3. The answer to question number 3 is E, all of the above. IAS 38 defines cost as the amount of cash or cash equivalents paid or fair value of other consideration given to acquire an asset at the time of its acquisition or construction, or when applicable, the amount attributed to that asset when initially recognized in accordance with specific requirements of other IFRSs. E is the answer to question number 3. Question number 4. The answer to question number 4 is D, useful life. IAS 38 defines useful life as A, the period over which an asset is expected to be available for use by an entity, or B, the number of production or similar units expected to be obtained from the asset by an entity. D is the answer to question number 4. Question number 5. The answer to question number 5 is C, customer lists. Customer lists do not meet all the criteria of intangible assets under IAS 38. The criteria that must all be met by an intangible item to be qualified as intangible assets are identifiability, control over a resource, and existence of future economic benefits. C is the answer to question number 5. Question number 6. The answer to question number 6 is B. Certain expenditure incurred at the development phase of a project is recognized as intangible assets. Expenditure arising from the development phase of an internal project is recognized as intangible asset if and only if an entity can A, demonstrate the technical feasibility of completing the intangible asset so that it will be available for use or sale. B, demonstrate its intention to complete the intangible assets and use or sell it. C, demonstrate its ability to use or sell the intangible assets. D, demonstrate how the intangible assets will generate probable future economic benefits. E, demonstrate the availability of adequate technical, financial, and other resources to complete the development and to use or sell the intangible assets. And F, demonstrate its ability to measure reliably the expenditure attributable to the intangible asset during its development. D is the answer to question number 6. Question number 7. The answer to question number 7 is E, none of the above. Internally generated brands, mastheads, publishing titles, and customer lists are not recognized as intangible assets. The basis is that expenditure incurred on these items cannot be differentiated from the cost of developing the business as a whole. E is the answer to question number 7. Question number 8. The answer to question number 8 is D, not recognized as part of the cost of an intangible asset at a later date. IAS 38 provides that expenditure on an intangible item that was initially recognized as an expense cannot be recognized as part of the cost of an intangible asset at a later date. D is the answer to question number 8. Question number 9. The answer to question number 9 is A, recognized in profit or loss. It is prescribed in IAS 38 that if an intangible asset carrying amount is increased as a result of revaluation, The increase shall be recognized in other comprehensive income and accumulated in equity under the heading of revaluation surplus. However, the increase shall be recognized in profit or loss to the extent that it reverses a revaluation decrease of the same asset previously recognized in profit or loss. A is the answer to question number 9. Question number 10. The answer to question number 10 is A, recognized in profit or loss. IAS 38 provides that if an intangible assets carrying amount is decreased as a result of revaluation, the decrease is recognized in profit or loss. The decrease is recognized, however, in other comprehensive income only to the extent of any credit balance in the revaluation surplus in respect of that asset. A is the answer to question number 10. That is all for this set. Thank you for joining us for the set 1 of IAS 38, Intangible Assets. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Inspiration Limited. Thank you once again and bye for now.